friends, and welcome to the CUInsight Network podcast. My name is Lauren Culp. I'm the publisher and CEO at CUInsight.com, and it is my job on this show to have conversations with the thought leaders who support the credit union community. We get to identify those issues that affect credit unions and have a discussion on all of the best practices that exist, so that we can all learn from one another and improve our credit unions. I'm really excited for our episode today. My guest on our show is Roger Willey, the Chief Revenue Officer at VisiFI. Let's jump right into the conversation. Roger, welcome to the show.
Hey, glad to be here, Lauren. Thank you.
I always like to start these episodes off with background on our guests. And I know most of us didn't grow up thinking that someday we would get to work with credit unions. I always tell the story that I didn't even know what a credit union was until I started working at one. So what did you want to be growing up?
Yeah, it's funny you asked that. I think if I go back to my childhood, my dream, like every other, I guess, Midwestern boy, was to be a professional football player, but a knee injury in high school and the fact that I was too short and too skinny probably had something to do with shooting that down. But I think as I got older, I always was fascinated with business and the idea that how businesses operate and work and grow and support their customer base. So when I went away to college, or I chose college, I really did want to be in a business application. But honestly, I really thought I would be an accountant or an actuary or somebody that liked math. I loved math and never would have dreamed. I was very shy, so I would have never dreamed I'd be in a role where I'm out in front and center and potentially, speaking to people and that type of thing. So it's amazing how careers sort of evolve, even when you don't plan it that way. So
absolutely. Well, really, from potentially trying to get into a football career and then thinking accounting. So what was the journey like then to your role now as the Chief Revenue Officer at VisiFI? And you mentioned out in front of people, out doing podcasts. So how did this all happen?
Yeah, that again, I was blessed in a lot of ways that I'm going back sometime before your time, but I happened to be coming out of college when marketing research and data analytics was in its infancy. So I had the luxury of sort of being a part of that pioneering stage of coming up and understanding consumer behavior and their buying behaviors before, really that was even a topic. And so I got lucky in the sense that I got into an industry that was growing and expanding and was kind of the mystery channel at the time. And so that opened up doors to work with, primarily Fortune 500 companies all across the country that had a variety of industries. But, what I learned over those years was that the methodology for business growth doesn't change. Really, it's the market and the products and the unique value proposition that really does change. So I had the luxury of kind of taking that methodology that was developed over 30 some years and apply it to virtually any business that needed help. So it was just fun for me because I got to leverage the understanding and the learning that I got out of all those companies and working with hundreds of them, actually. But the reality of it was each one of those were unique challenges. And because they had different markets, different products. So it kept me interested, kept me focused. And every day was a learning opportunity. So I've done that most of my career. If somebody asks me, what I do for a living, it's always kind of hard to put it in a bucket. But my answer is typically I'm a business growth strategist that uses data analytics and data intelligence to help companies grow their market share. So that's kind of how I summarize it.
That is so cool. And what a journey. I love that. So for VisiFI, from your perspective at the company, what is that elevator pitch that you would give folks if they're like, okay, well, how would you summarize what you do, where you add value for credit unions?
That's another one, Lauren, that I'm long-winded, so this might be a 2-hour. I'm just going to warn listeners, this might be 2 hour. But no, VisiFI's elevator speech is probably longer than I want it to be. But the truth of the matter is we're a 40-year-old technology provider in the credit union space. We're a CUSO, credit union service organization, that supports about 120 credit unions across the country. But what's kind of unique about us is we're an aggregation of 3 different companies. We're 2 pioneers in the core business and the application development business in the United States. And our parent company is actually based in Trento, Italy. And they're a European leader in financial fintech applications, a $3.8 billion company. So there's kind of a unique story behind who VisiFI is, and it's part of the reason we rebranded a few years ago and regrouped when I started here to provide a fresher approach and a fresher look at how technology needs to fit into the credit union world today.
Well, I love it. I think as folks are kind of evaluating where they want to go, I know at VisiFI, you work with a lot of credit unions on how to be competitive in today's market too. And so I'm curious what that looks like and what those opportunities are that you see for credit unions out there.
Yeah, I think the first thing I kind of want to mention is that one of the things we did when we rebranded the company a few years ago is we adopted the mantra that when our customers grow, we grow. There's lots of ways that technology, quote, vendors can support their customers, but the reality of it is, and show growth, we'd rather not nickel and dime our customers. We would rather be in a position where they can leverage our technology applications to grow the company. And so our focus is the best way for us to grow at VisiFI is, let's say 20% is our growth model, is the best way is for our customers to grow 20%. And then obviously that cycles down to us, and that creates revenue for the CUSO. We can reapply that income into new products and new applications and support services. So I think the opportunities for growth is kind of front and foremost for us in our thinking. So I would say that we have really adopted, and I don't think this is anything unique that anybody else wouldn't say, but we've really been focused on the digital platform. And I think what credit unions need to understand is that the digital environment, although for some it's very uncomfortable and very expensive, it levels the playing field for any financial institution that's out there. And so when you look at the digital environment, you can recreate a brand. You can look bigger than you are. You can expand your products and services and your reach simply through a web environment. And so if credit unions don't quite grasp that or understand that, you can look at how Amazon changed the retail industry, or there's lots of different applications out there where the internet and the online channels has created from small organizations to larger institutions that are reaching a much broader audience. So I think one of the opportunities for growth that we're focused in is to expand the digital environment. So we created a product line that we call the Digital Triple Play, which is online account opening, online mobile and banking applications, as well as digital lending, all within one platform, one system. So the idea there is to provide the consumer, the member, one seamless environment where it's as if they walk into a branch. They're dealing with one system, one person, in this case, one technology that creates that environment where they feel like, still feel like a member, but can take advantage of the convenience of mobile applications.
Of course. I think that to your point, really leveling the playing field for credit unions is so critical, and technology does do that for them. Although there are always some barriers to entry, maybe in technology, and I think that there's sort of this, maybe whether it's correct or incorrect, but maybe this perspective that it might take more money to be able to get into technology. So I know too, when folks are thinking about that, there's also a lot of opportunity in being maybe quick and nimble for credit unions because they're smaller. And I've heard oftentimes folks talking about how credit unions may be a bit slow to adjust or slow to change. Do you have insights on that, even from, technology leveling the playing field, but into some of the things that credit unions can maybe take advantage of, being that they could be a little bit more nimble as a smaller organization?
Yeah, I think, and I hate to admit this, but in the 90s, I worked with most, if not all, the large banks to help them develop competitive growth strategies and utilizing data. And to be honest, when I moved into the credit union world a few years ago, I felt like I took a step back in just the strategy piece of it. Like we've got some catch up to do, is kind of my point. Before we lose listeners, that's not a critique. I understand the uniqueness of a credit union and how they've built their market share over the years and the advantages that they have there. But I do think that the adoption of digital, we're behind. Sure. Particularly good digital, I would say, from a user experience. And I think the other part is, and again, I'm probably a little bit biased because I see the value in it and have seen the value over 30 years, but just the application of data and intelligence, the banks are way ahead of us. And I tell our credit unions, if you're trying to outbank the banks, we've got 20 years to catch up. We've got to sell our unique value. And so I think that's some of it. Again, I'm not being critical because I understand that the market's changing rapidly. And it's hard sometimes to financially afford to adapt, or at least to feel that way.
Mm-hmm.
But the reality is, if a credit union today isn't embracing that, the new market, which consumers are getting younger, the way individuals choose to bank has changed. Again, these are well documented. We're seeing the growth on our digital platforms like crazy. But the truth of the matter is, if you don't make a change, I guess I'm building more of a case for change. If you don't make the change and adapt to the market demands, then you're going to struggle. And I tell credit unions, and when I'm out speaking at different conferences, that if you took a look at a list of clients, some of these are former clients of mine, but if you look at IBM and Blockbuster and Kodak and AOL, those are organizations that were very high quality. I mean, they ran well, they owned the market that they were in, yet none of them are relevant today. And so to build the case for making adjustments is the market changed on them. In case of Blockbuster, it's easy. Netflix figured out how to deliver the video directly into the home, so people didn't have to drive there. Unfortunately, Blockbuster didn't adjust to that, and they're gone today. IBM didn't really understand where the computer industry that was going, and they couldn't make that adjustment. I would say the same in Kodak. I mean, everybody has a camera now on their
right.
phone, and they save them in the cloud. So who would have thought that would be something that would impact a 100-year-old company? So those are the applications. I think that's the scenario we're in for credit unions today, whether we want to admit it or engage it or just bury our head in the sand. But at the end of the day, as an industry, we need to adapt to the market changes and understand how to grow within a different environment.
I think, when credit unions are imagining those things that we've always done so well, or imagining what the future could look like, member service always comes up as something that credit unions, okay, well, we're really good at that. We have that relationship with our members. But it's really interesting too when you talk about the market changing around an organization, because we see that ease of use and digital experience tends to be how consumers today are rating that experience. It's not necessarily, do I know the teller at my local branch? It's that, do I have an easy experience, and kind of comparing that with the experience that we have other places. So it's so critical to think about. And in terms of some of that constant change, I know technology is really a key focus. How important do you see that in terms of credit unions remaining relevant to their members? I know we talked about it. It's really important. And what suggestions do you have for credit unions who are trying to maybe level up that focus?
Let me maybe step a little bit back and talk a little bit more about the value proposition of a credit union, because I think it ties to that. One thing I've noticed, and this isn't technology necessarily driven, but it's just an observation as a 30-year, marketing, I guess, seasoned professional. One thing we're not doing is we're not selling and educating the marketplace. And we can do that using technology. But the truth of the matter is, you could ask any 30-year-old or 25-year-old today that walking down the street if they know what a credit union is and what the value of a credit union is. And I bet you probably 90% of them wouldn't have a clue. I think as an industry, when I was on the dark side and we were working with banks, the one thing we couldn't emulate from a credit union's perspective was that personal relationship and that affinity they had to tie as being a member and an owner in a credit union. And we tried. We used terms like personal banker. We used terms that tried to give that impression that we actually knew who you were when you walked through the door. And the challenge with the industry right now is that we're losing that advantage. But by the same token, there's other advantages that we're not selling. And I go out and I look at websites and I see how credit unions are positioning in the market. And to be honest with you, you could probably pull up most of the community banks and banks' websites, and they kind of mirror each other. Yet there's uniqueness to, we may not see you every day in a branch, but we still know who you are and we know what your unique situations are, and we're going to help you, navigate your financial world through your lifetime. I mean, that message doesn't always come through in some of the marketing and things that I see. I see competition on the lowest rates and trying to drive loans and trying to become the primary bank for a consumer by adding more products. But I think the story sells, and I think we've kind of lost that focus. So that's one of the trends that's on a negative side, maybe. The other one that we've noticed coming up a lot, and this, again, drives a lot of our product mix and strategy, is that credit unions are really overwhelmed by the number of vendors that it takes to run a day-to-day operation in a credit union of any size. So the reason we have cores, we have 2 cores, and we have our digital platform that's winning awards and is the talk of the industry. But the reality of it is we need to round out the rest of the solution so we can take that burden off the credit union and let them focus on that growth. So although, again, you could look at it from the outside and say, well, they have 60 technology products. They're just trying to get more in my wallet, more of my market share, more of my money. But the reality of it is we're trying to take some of the burden off by creating a seamless ecosystem so credit unions can focus on their members and driving growth instead of necessarily watching their backside when it comes to the technology pieces. Those are 2.
Those are so important. I think it kind of hit the nail on the head there. There are so many vendors and so many partners out there for credit unions, and kind of evaluating that whole landscape is a kind of a challenge in and of itself. So it's so cool to hear about sort of the triple play idea that you all have with your products that kind of all fit together. Mm-hmm. And I'm curious too, as you're innovating at VisiFI, as you're thinking about the future of financial services, what is that main focus for you when it comes to really innovating to meet maybe the needs that credit unions are going to have 5-10 years down the road? Yeah,
I think that's the $1 million question. Yeah, I inherited, or I absorbed our product strategy into our group this year, which I oversee sales and marketing and account management, but anything market facing. And we've always had a 5-year product plan. And I'll be honest with you, it changes so fast. We rarely get through that 5 years. We rarely get through 1 year with our plan,
right?
Because we're adapting just like everybody else is. But I think one of the challenges that we face that I'm struggling with personally, maybe the credit unions out there are too, but it's hard to weed through all of the different fintechs that are popping up. It's hard to distinguish what's going to make it and what's not. And again, as a business strategist, as a marketing strategist, we try to layer some business logic to some of these applications out there. And I think I'm going to get to your answer, I promise. but in the context of there's so many things popping up, these applications that kind of catch your attention. And it makes you stop and think. And then these other entities like Apple getting into our space, and you kind of looking over your shoulder at a lot of things. And the reality of it is that based on my experience, ultimately it's got to be adopted by the consumer. And sometimes it's hard to predict. We get approached weekly, if not daily, by someone who wants to integrate into our online and mobile system. And they want to be, and we have customers that bring us, ideas and applications. And so I'm not exaggerating. I think we have 28 right now that we're evaluating.
Wow.
And we have to look at it from a perspective of, is this a real need for the market? Will it help our customers grow, or will it just add another complication for the member to be able to do what they want to do? And so, we really go through a challenging, and I can't imagine what it is for credit unions who are getting approached by this, but we go through a pretty deep vetting process, meaning that if someone comes to us and says, we've got a product that consumers are going to love, we need to understand if that's absolutely true before we spend our time, energy, and frankly, as a credit union service organization, our clients' money to develop something. So we do a lot of focus groups internally with our customers, but by the same token, we have to assess the market. But I don't know if you guys have run into this, Lauren, in your other conversations, but it seems like there's something new popping up every day that is the next best thing. And about the time we get done developing it, nobody wants it. It's already run its course and there's something else. So our 5-year plan is not something I would want to share necessarily, but I will say this. The filter that we put it on is this really going to help our credit unions, expand their membership base, or help them cut costs so that they can reinvest money into growth, or time and energy into growth. So that's kind of the funnel that we have. But from our standpoint, this isn't a sales pitch, but we're unique in that we have 40 years of in-market experience, but also are backed by a $3.8 billion company that's investing in innovation and thinking differently and outside the box. And so it's the reason I came to work for them. I was excited about the fact that we have an opportunity to really, truly make a difference in the industry. And, we'll continue to kind of do that. I don't know if I answered your question, but
you did. Absolutely. I think it's so important for us to be innovating. And it's kind of tough sometimes because you get to the point where you're like, okay, we made it, we rolled out our online banking. We've got online loan applications all set up. And then it's like, okay, well, let's just relax for a little bit and enjoy it. But if we're already kind of behind, if that's just what we've rolled out. So it's so hard.
Well, let me make one more commentary if I can.
Yeah.
And that is that I think, when I came into this world, I'm only 3 years into it. So you can look at it two ways. One, I don't know what I'm talking about, or two, that I'm given a fresh perspective. But when I looked at what it takes from a technology perspective and the evolution of the technology for credit unions, the advantage that a Wells Fargo or a Citibank or those guys had is they built their own platforms. So they had the money and the capabilities to build systems that matched what they do. In the credit union world, it's sort of been an evolution. And I'm not picking on anybody because we're one of those companies. But the reality of it is it was a core company. And then now you're stacking on an online product and then a mobile product. And then, the evolution that's kind of happened has created this. If you lay it out on a sheet of paper, it looks like a bowl of spaghetti. There's so many lines coming in and out of a small credit union just to operate with cards and payments and all that. I think that complexity adds a lot of cost. I think that complexity adds a lot of risk. And so from that perspective, I know the model right now is the best of breed, and you go out and find all the products and you snap them together. And I certainly understand that. And we're part of that. We're an open system, so we don't limit our customers to using just our products. But the reality of it is it's probably not the best way to do things. And so I think this market really, really needs that fresh perspective, which is why, I came to work for them, because I felt like we were uniquely capable of providing something new to the market where we're not married or heavily invested in any of our products going in. We can start to build and design for today's credit union and to be competitive, frankly. So.
Absolutely. Well, and I think that fresh perspective, when you're talking about the Blockbusters, the Kodaks, I think that's the perspective that they probably would have benefited from, of someone saying, things are changing around us. And if we get comfortable where we are, maybe we're not going to evolve quickly enough either. So it's so critical. And I love hearing about that fresh perspective that you're able to bring to the organization at VisiFI, to the credit union industry as a whole. We're definitely going to link to some contact information for you too, so that anybody who's interested can get in touch with you, which will be great.
Right. Well, I think credit unions are waking up. We're seeing a lot more interest in that digital, experience with the members. And I am encouraged by a lot of the conversations we're having, because it was very different 3 years ago. Prior to the pandemic, I think there was a little bit of that, hey, we're doing okay kind of environment. Sometimes when the market gets challenging, it kind of wakes you up, and it feels like that we're seeing more and more of that in the marketplace today. But there's great opportunity out there. There's without a doubt, credit unions still are relevant. I just think we can do a better job of making sure the market knows that. There's some education that needs to happen. And we need to find a way to attract those younger members. And, for the most part, the perception is credit unions are behind when it comes to technology, and we've got to change that. So.
Absolutely. All right. Well, we could talk about this all day, but as we wrap up the show, I also love to have some fun with rapid fire questions to let our listeners get to know you a little bit better. We like to say the questions are going to be rapid, but your answers don't have to be. So if you are ready, I will dive right in.
All right. I'm not sure I'm ready, but we'll go ahead.
All right. Well, what is a recent purchase that you didn't know you needed that's become something you can't live without?
Okay. I can't believe I'm publishing this, in a national, but I'm embarrassed to say it, but the best thing I've purchased recently, or, within recent months, is an infrared sauna in my house.
Wow. Okay. I like that.
Probably nobody knows what those are or has heard of them. But I tell you one thing, if you have a bad day or you're feeling kind of rough or whatever, you can sit in that sauna for 30 minutes and you come out as a new person. So it's supposed to be good for you. We'll find out. But it's been a godsend for me. So
I love that. You are the first guest to say that on the show.
I'm probably the only one in the country that owns one.
I love that. All right. When you hear the word success, who is the first person that comes to mind for you and why?
My mind immediately went to business people, but just because that's where I live and have breathed for 30 years. But I'm going to throw a curveball in here too and say the Rolling Stones. Yeah. And I think the reason, I'm not even a fan, but what I've admired about them over all these years is their ability to adapt and change music styles, but they stay true to who they are. And I think there's a lesson there. I've used that as an object lesson in consulting businesses in the past. I think there's just something about the sustainability over 50 years. I think that's impressive. Anyone that's been married for 50 years, you just got to shake your head and give that a huge kudos because, those are the things that impress me. It's easy to come up with not easy, but it's possible to come up with an idea or a style. It's awfully hard to adapt that over time. And I guess I'd tie that right back to the credit union industry. It's going to take some adaptation to stay relevant in the marketplace. And for all those credit unions that are making those adjustments, that's amazing to me.
So cool. Well, the Rolling Stones, not the first person that would have come to mind for me, but such a great example. I love that. Okay, a random question for you. What are you listening to most right now?
I try to pick up podcasts, but honestly, my hours are long and I'm traveling quite a bit these days now that we can do that. So most of my listening is more entertaining and things that your listeners probably would not necessarily, not that they were bad things, but they probably wouldn't care that much. So I'm probably not going to, but I would just say more entertainment, more, that's my relaxing time.
Absolutely. I love that. All right. Any books that you've gifted or you just think everybody should read?
Yeah. There's one that I've recommended and I've given out to some of my staff, and it's called Building a Story Brand by Donald Miller. If any listeners have not read this book, I'm old school. I've been doing this a long time, and I'm a firm believer that a lot of things in marketing and data analytics has been done for 30 years. It just changes names so it sounds sexier and modern. So I'm hard to change. I'm pretty stubborn because, the things that I've learned, hands-on working with hundreds of companies over the years. But this book was given to me as part of a initiative for a nonprofit organization that I am on. They were changing the way that they were kind of approaching the market. It's a book about simplifying your message to the market for marketing purposes. And I really bought into it. We've just seen so much more activity on our website in this nonprofit that basically I brought it back to VisiFI, and we're in the process of kind of changing some of our strategies around it. Very, very simple. So if you're a credit union CEO out there or a credit union marketing person, it's not complex. It's written by a guy that writes movie scripts for Hollywood and has a very unique approach, I think, to creating a message and interest out there in the marketplace. Some of it's a little over the top, but for the most part, I think it would be beneficial if people read it.
I love that. I have not read that myself, so I'll have to add that to the list, and we'll link it in the show notes for all of our listeners today. All right, you mentioned you're traveling a lot, but let's say that the calendar is empty. What are you doing to unwind outside of work, maybe outside of the infrared sauna?
Yeah. Well, I'm traveling, but I like to travel for pleasure in my spare time. There was a day when that wasn't true. My wife and I have been trying to we're empty nesters now, so we're trying to get to places that we always wanted to slip away, but it was hard to drag the kids or with their activities and everything else. So we're catching up a lot. So doing a lot of travel when we can squeeze it in between my business travel. So.
Awesome. I love that. I've been doing some travel myself, although I have to say that the airline experience leaves a little bit to be desired right now.
I'm flying to New Orleans on Tuesday, and I just blocked the whole day out, assuming I'm going to be stuck in an airport somewhere.
Right. Yep. All right. Well, again, we're going to link to everything that we've talked about today in the show notes. But my last question for you is, do you have any final thoughts that you'd like to share with the credit union audience or final asks of our listeners today?
Yeah. I mean, I think, no matter who you use as a technology partner, my encouragement would be for the credit union industry. It's a staple to our economy. It's a staple and a key piece to a lot of consumers out there across the country. My just challenge would be, we owe it to that particular part of the market that to, do what we can to be relevant and to meet their needs going forward and not give up this market to a traditional bank. There's certainly opportunities for us to improve and do some things, but I hope that everybody understands the challenge and the responsibility that we have on our shoulders to make sure this industry doesn't go away or become irrelevant. Back when I was on the dark side again, a lot of the intelligence we built for these major banks ended up consolidating the market. They used that as a competitive advantage to gobble up the mid-sized banks. And the consumers didn't win because of that. And I know there are small credit unions out there that are struggling to survive, and there's a lot of, good reasons for that. But consolidation isn't better for the consumer. So I just hope that, there'd be an initiative and a drive to address these market changes and adapt to the market and do what you can to be relevant so that we can maintain and keep our numbers up. Some of the numbers that are out there for projections over the next 10 years are disappointing. I know VisiFI is committed to doing what we can to avoid that happening. And I hope everybody has that sense of urgency, that's out there listening.
Well, absolutely. And I think that the leadership that you all provide at VisiFI for the credit union industry and some of that is really critical too. So thank you so much, Roger, for being on the show, for sharing those insights with us. We're going to link to your contact information and your team's contact information here for anybody who wants to get in touch. I hope that you stay well. Thanks to all of our listeners for tuning into the CUInsight Network podcast, and we will be back again next time.
Thanks, Lauren.